The global financial landscape is entering a new era, and the tension between traditional banking systems and decentralized finance DeFi is heating up faster than ever. In this detailed discussion, we're diving into one of the most exciting topics right now: banks versus Sui DeFi stablecoin yields, featuring insights from Stephen Mackintosh, head of strategy at Sui Group. This isn't just another market update, it's a real talk about how the balance of financial power is shifting from institutions that have ruled money for centuries to blockchain ecosystems that promise freedom, transparency, and real returns. Let's start with the banks. For over 100 years, banks have been the gatekeepers of finance. You deposit your money, they lend it out, and you get a small fraction of the profits. In 2025, most banks still offer between 1% annual yield on savings, while inflation averages 4–6% in most economies. That means your money in a savings account is slowly losing value every year. Meanwhile, these same banks lend out your deposits at rates up to 10–15%, profiting off your capital while you barely earn anything back. It's an outdated system built on dependency and trust, and that trust is fading fast. This is where Sui's DeFi ecosystem changes the game completely. The Sui blockchain is built for scalability, ultra-low fees, and fast transaction speeds, making it a prime platform for next-generation DeFi applications. Within its ecosystem, protocols like Cetus, Crydex, and Scallop are redefining what stablecoin yields can look like. Instead of 1–3%, users are seeing 8–15% annual returns on stable assets like USDC and USDT. These yields aren't the result of speculative hype or token printing, they're generated from real DeFi activity, liquidity provision, lending markets, and automated yield optimization. In short, the returns are transparent, sustainable, and accessible to anyone with an internet connection. In an exclusive interview, Stephen Mackintosh broke down why Sui's DeFi model stands apart. He said, "Banks rely on trust, but DeFi relies on code. With Sui, yield isn't decided by boardrooms, it's shaped by real market dynamics and algorithmic precision." This single statement captures the entire philosophy behind decentralized finance. The Sui Group is pushing for institutional-grade DeFi infrastructure, bridging traditional finance with blockchain-based yield systems. According to Stephen, this isn't just about higher profits, it's about financial fairness and access. He added, users shouldn't need to rely on banks to earn from their capital. DeFi makes yield programmable, transparent, and global. When you look at the numbers, the contrast is shocking. Traditional bank savings accounts offer around 1.5%, high-yield bank accounts may go up to 4–5%, but Sui's DeFi protocols regularly deliver 8–15% APY on stablecoins, and these are assets pegged to the US dollar. With near-zero transaction fees, users can start earning even with as little as 100, something unimaginable in traditional finance. That's financial democratization in its purest form. Of course, with higher rewards come higher risks. DeFi platforms can face smart contract bugs, liquidity shocks, or temporary depegging events in stablecoins. When asked about these risks, Stephen emphasized Sui's security-first approach. Every major DeFi protocol on Sui undergoes multiple audits and real-time monitoring. We're even building native insurance protocols to protect users from smart contract failures. This proactive approach could set a new standard for how DeFi handles security, a critical step for mass adoption. Zooming out, what's happening here is a massive shift in financial power. For centuries, banks have held control because they own the infrastructure of money. Now, DeFi, especially ecosystems like Sui, is rebuilding that infrastructure on open, transparent, and decentralized code. Imagine a world where your savings generate 10% APY, loans are processed by smart contracts instead of biased underwriters, and users don't have to trust banks, only math and code. That's not a fantasy, it's the Sui vision, and it's already taking shape. Stephen also shared that the next evolution for Sui is interoperability. He revealed that upcoming initiatives will connect Sui's stablecoin systems with Ethereum, Solana, and Cosmos, enabling users to earn, lend, and trade across multiple blockchains seamlessly. Our vision is to make yield a global utility, something every user can access securely, instantly, and transparently, he said. If successful, This could unify fragmented liquidity across chains and push DeFi closer to mainstream financial systems. Here's the real talk: banks aren't disappearing tomorrow, but their grip on the global financial system is weakening every day. Once people realize they can earn 8–12% safely through decentralized protocols while banks offer less than 2%, the shift will be unstoppable. Sui, under the leadership of innovators like Stephen Mackintosh, is positioning itself as a leading force in this transformation, building a DeFi ecosystem that's not only profitable but also fair, accessible, and secure. The bottom line? The age of banking monopoly is ending, and the era of decentralized yield has begun. As DeFi continues to grow and stabilize, platforms like Sui are showing that the future of finance doesn't belong to institutions, it belongs to the people. This is the future of money, transparent, programmable, and global, and it's being built right now on Sui.